Don't buy commercial transactions. You watch this video because most people, I would say 99% of people, get this wrong. And even 97% of real estate agents get this wrong every single day, even commercial agents. This is going to save you so much time and money and make you way more in your investments moving forward. Hey, I'm Jordan Super. I'm one of the top agents in all of USA, TV show host, top 1% agent, and my team's done $1.6 billion transactions over the past few years. And I just did or started doing a transaction for my clients on a storage unit opportunity. And at first, it looked amazing. The deal was like a slam dunk opportunity, once in a year kind of situation. But with more due diligence, more investigation, that deal became a slam dunk to a house on fire, or in this case, a storage unit on fire. And this is why I'm kind of break down for you exactly how to get the best transactions, understand the financials, and how to make an informed decision when investing in real estate, especially in commercial real estate. So, without further ado, let's jump into this. This is going to be a full breakdown of real estate analysis, and this is the deal. Now, I'm not going to talk bad or ill about any other agent in the industry because we're all working together. But this is the transaction. Obviously, I blurred out the address and the picture for confidentiality reasons. But overall, you can see that this house or this property has been marketed now for 812 days, which is a super long time, almost 3 years. But with that being said, if I look at the numbers for $2.5 million, I can get 130 units with an NOI pro forma of 262, which is incredible. Like, that is amazing cash flow. Also, it says this is a 10.48 cap rate at pro forma. Now, normally when I see pro forma, I say, okay, well, obviously it's not there yet, but it could be, which is what it means. But on this one, it says occupancy rate 100%. So the only thing that can really increase it would be inside of the remarks saying each unit can be increased by $15. So the 130 units times 15, like, yeah, the math is there, but like not enough to really make it be a terrible transaction. So if we do the math, that means that we are losing out right now about $2,000 a month, $1,950 to be exact, and potential income from this property of, gross income. Now times 12, that's $23,000. So in my mind, that tells me for my clients that we should be around 240, 230 in terms of income for NOI. Again, more on this later because NOI is net operating income. This is more gross. I'm going to whole breakdown for you at the end of this video. But for easy math and to go along with this, we use NOI as our math here. But I see this property, looks amazing, 130 units, even says occupied 100%, can expand by adding more units to the screen spot in the middle and increase your rents. So like, maybe even with the 100 units on top of that, the pro forma could be higher. Maybe if all that said and done, let's say each unit right now is $95 total, times 100, that's another 9.5K in a year, 114. Okay, so now we're getting closer to like 150 NOI. 150 NOI is still very good return at this price point. It's not going to be a 10.4% cap rate, but it's still a really strong investment. So I said to my client, hey, for all that being said, this looks really good. Let's kind of see what it looks like. And on face value, I know it's been on the market for so long, I'm saying, well, since it has pro forma, it's not fully leased out at the highest rent amount, and it was still missing some units in the middle, we have some options. We can do full ass price, which, no investor ever does. So 2.5, based on what it says, if it's pro forma, which is projected is 10.48. We know that we want to go lower. So 2.25, okay, at the same exact numbers, 11.64%. Our loan is 20% down to 1.8. Our annual debt service times 30 years is 129. Our DSCR equals NOI minus debt service is 2 times 202. Now, what you're looking for to get approved by a bank is a minimum around 1.2 to 1.3. That's the minimum they want to see to get approved by financing. So on this account, they're good in both regards. And then you have your highest level, which is your free cash flow, which is 132, 11K per month, after 260. If we did 180, 200, it could be like, closer to 6K and 7K and so forth. And then our cash on cash return is almost 30%. At $2 million, it's 13%, 1.6 million loan, 115 for annual debt services, high returns. This looks like a slam dunk deal. But again, no deal this amazing is on the market for that long. That's what I learned as well as doing so many transactions, that if I ever see a deal on market for 800 days, I think one of three things. Either one, the agent is doing a poor job marketing the property, which is possible. Number two is that there is some discrepancy when you see the property and do your due diligence. So for inspections, for pricing and comps, all these things, there's some missing things there. And then the third one could just be that the seller is unreasonable and will not negotiate. Those are the three reasons. More often than not, to my clients, when I see a deal that's been on the market for so long, I tell them, it's probably not worth your time, it's probably a bad deal. If you want to move forward, we can, but in my experience, the good deals that we find that's on the market normally goes really fast because the agent did a good job, or the buyer's agent, investor's agent did a good job looking at the numbers to say, okay, this works for my clients, let's buy it for someone else sees it. So one of the best deals have gone really, really fast. This deal has been marketed for so long, but based on the math, it looks like it was worth pursuing. And me being one of the top agents in America, I want to make sure I never lose negotiation power. I help my client get the best deal, so I call up the agent. And also for you as well, watching this, you want help buying or selling real estate, whether that's commercial, investing for yourself and for your family. Down below, link in the description or the first comment, how to call my team to help you exactly the best deals moving forward in your endeavors in real estate goals. I've been featured in publications across the globe for breaking records in selling and buying houses and investment properties with my clients. But that aside, same as a plug there, I called up the agent. He said, yep, you can see the property. Just so you know, the numbers don't make as much sense as it does online. Okay, I kind of assumed that based on, being pro forma and having room for expansion. And I thought maybe, at the end of the day, it's a little bit lower. And then we get to the property, and it looks amazing. It's not 100% occupancy rate, probably 80 to 70% if I looked at, because a lot of the locks are not there. And he also told us, and by the way, there's 3 more acres of land right across the street that's packaged with this transaction. Now, one, they probably should have added that into this. So this says 0.175 acres, and he just told me there's 3 more acres across the street over here that attached to this that we can have with it at 2.5. Now, great, trailer on top, that makes it a little bit more worth it, room for expansion and growth for my investor client. So we go out there and we looked at the property, looked at the land, looks like a great turnkey, not turnkey, but like value add opportunity. And after doing the math though, he called us again and saying, by the way, I just saw the financials, and I'll let you know that the NOI is actually $96,000 a year, not $262 or $150 that I thought it'd be. Probably $150 to $200K was my guess. Way, way lower. And on this point, before we get too long on this actual example for you guys, I want you also to understand like who you work with is so important because for me to get a hold of these client agents on this deal, well, not just a phone call. I called, texted, and emailed different brokers and agents within this brokerage numerous times for a week to get a hold of them. Also, why I thought maybe I haven't sold yet because there's no communication and it is a good deal. So again, for the reasons why I thought it'd be good. And after lots of harassment on my side towards them, I finally got a hold of somebody so I can help you out, see the deal, actually $96,000, and I've been asking for financials for the past 5 days and haven't seen them yet at this time. And then finally, he tells me verbally it's 96K, and I'll send over the financials here today. Great, sounds good. And at that math, I looked at it and said, well, if it's $2.5 million at 96K a year NOI, that means his cap rate, which is like your return on investment, is 3.8%. That means that one, you're losing money every single month. The bank won't finance it. And I said to him, we can't do that, but how about you keep the 3 acres because we don't need it for the expansion. This is good enough. We'll use what we can in the middle of the place and add an extra 100 units. So keep that for your clients. But I want to buy at $1.5 million and give me $117,000 in concessions. So on the back end, we can use the concessions to pay for closing costs and for expansions. So his cash to cash return is much higher, and also it allows them to now become financeable. Again, 1.2 to 1.3, what we're looking for DSCR. And now his cap rate is around 7%, thanks to the extra $100,000 there. So now it's a strong deal again. However, this is where it gets worse. It's also why I'm so big on being data heavy, data focused. So we are a data-driven team at my team I run over here at the Elite Real Estate Group. And part of that, because I see this happens all the time. And due diligence is the most important thing you can do in real estate to protect our clients' interests. And what we need normally when we look at our data for commercial real estate at least is a T12, which is a trailing 12-month P&L statement. So it's itemized income and expenses, rent rolls, 3 years financials, tax returns, or CAM, bills, tax bills, insurance, service contracts, schedules, operating budget, and so much more. So when I ask sellers or agents for financials, I want this kind of stuff to let me know exactly what we're investing in. Unfortunately, on this transaction, which I should have guessed based on the current communication, all they had was the current rent rolls. Which I show you here, I will obviously blur out names to protect people's privacy. There are 130 units supposedly that we're buying with this investment. Now, a lot of times when you see this, people just look at the rates and the rents and they move forward super quickly and they get to this example and say, okay, great, there's 44 units and on this page as well, you can see 130 units there, and then there's all these random units that are not marked on the website, and then all these spots as well, 16 of them, so there's like 30 things here, 25 things here that are not on our site, which makes it a little odd because one, why would we not record that anyways in the 3 acres? But that being aside, he told me it was $96,000 a year of NOI. And NOI, again, for those watching, I'll tell you more about this later on, is net operating income. This is gross income because it's just rent. More than I but here you can see there's 44 available, 37 delinquent, 73 occupied, 1 hour service, and a couple other things as well. A total of 161 units. And they are saying that we are getting 9.3K a month. So on face value, just seeing the due diligence, it looks great. I also see they owed by people who haven't paid them yet $36,000. So if I go back over here, there are people who owe 160, 1,000, 2,000, 25, 1,500, 3,500, 240. And here's the thing. Like, this is means bad management. Now, does this mean this is bad investment? Not exactly, because like just because this current owner is mismanaging the property doesn't mean that we cannot make that all new gold mine. Because these people, maybe it's never been spoken to, maybe they are just not talking to them, who knows? But we can get them out of there. We can say, hey, pick up your stuff. It's being sold by this date. List goes on. There's a lot of things you can do to mitigate these expenses and add more cash flow moving forward. So honestly, seeing delinquent is not a bad thing. It's just more value add for you as an investor. But it just also means that like it was so badly managed that like it's $80 a month. So like this is like years of them not getting paid and just letting it happen. So like this is why it's so important to really go through the diligence and you look at the numbers and not just take it by face value or what the agent said to you or what this says to me. For this sale, if I look at this number, that means my gross income is $112,000 a year. Sounds better than $96,000, but like even then, I know that's not totally accurate. So let's go even further though, because I want to do some digging. But right now, this looks like it does not make sense at all based on the agent, the numbers, and the listing. Now, what most people do, which is a fallacy, so don't do this. Make sure you have an agent working with you, because again, people miss this all the time. What they do is they'll say, hey, you are an expert. You saw my last video, again, a whole video breaking down AI, how to use it for yourself. I'll have that pretty soon. You'll probably be able to watch it. But it says, make sure you give a role to AI. You are an expert broker and top in the world at investing. What is the cap rate for this? And actually, what is the gross income? Because the cap rate, they won't know until I get more information. So I want to know what is the gross income, not NOI, because NOI, again, we need to know the expenses. More on that, again, pretty soon. So I asked AI to give me a breakdown of the gross income on this property. And it's going to say, great, it's 163 units, 73 occupied, blah, 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 blah. Based on this, potential income is 12.7K. Right now, it's 9.3K. You're owed $36,000. And it says this means a gross income of actual rent collected is $9,300 per month. So it's using, So it's using this number here as our rent, as our income, which we don't want, because that's there's people on there who are vacant. So right now, gross income, upside potential of stabilize, making 41K a year, and the list goes on. Now, I want you to exclude the people who are delinquent. So now she's going to go further. Again, most people miss this. Most people have no clue that you have to make sure the delinquent people are not on there, because like they are not paying. So like that is not gross income if you're not making money from those people. And now she does the math, and she says, okay, gross income, key takeaways, nothing's changed. So her number remained the same. This is why you cannot use AI, and also why AI will not replace agents and people, at least not ever, honestly. Because, watch this. What I do is say, okay, great. Let's make an Excel sheet. I'm going to have an Excel sheet of the same data we just saw in one spot. And I'm going to look at all the occupied. So you see occupied places, and I know there are around 73 of those on them. That means that right now they're making $5,400 a month in gross income. So 5,470 times 12 is $65,000 a year of income. That is the NOI, the agent will say on this example, but it's not NOI, it's gross income on him. So if I just listen to ChatGPT, I would steer my client in the wrong direction and say, this is a great deal, let's buy it, even though we know here it's way, way less. And to go even further, why it's so important to have a good agent working for you like myself is that also included all of these that we're not even buying anymore because the land we don't want. And two, when we saw the land, just for extra clarity here, these RVs and open spots, didn't even see them. And the RVs we did see, there's like 3 of them, which maybe, no, there's like 3 of them, they're behind the fence where the land cuts off at. So they weren't even on the land it was buying. So even then, it made even less sense. But again, if I just count the 130, this is why we have my Excel sheet, I can see that how it looks. I also know based on available, they're losing out right now on 2.2K a month. They should be making if it's all fully leased out. And then for the locked ones, I see that they're missing $15,000 there, and then another $16,000, $17,000 from delinquent past payments. So all in all, this deal is getting messier and messier the more we analyze it and do due diligence. So gross income is 112. If you ask ChatGPT, it says also 112, even though we know better than that. And if I come back over here, all one's amazing transaction at 10.5 almost percent cap rate, 260 NOI, went from being a fantastic deal to a nightmare. And now I redid the math and said, okay, for this to work, at 2.5 won't happen. At 1.5 at $60,000 for 117 concession, it still won't work. So we're still losing 2K per month, 25K per year, and the bank won't finance it. At $1 million, at that 60K gross income, again, gross, it says NOI, because he said this is NOI, but more on that soon. That is 6% cap rate, which is not that high, and we're only making $250 a month and around 1.5% for DSCR, which probably won't get approved or funded. So we told them, hey, my LOI I gave it to you prior, void that. So we didn't see any financials yet. We want to make sure we lock the deal down before it was done. And now we are no longer doing a transaction. But we also know that this is a value add opportunity. Like, can we make it work still? For you watching this, you probably know as an investor, you're not buying for cash flow. Cash flow is great, and you want that, especially for storage units. But what you're mostly buying for is going to be appreciation or tax advantages, equity pay down, leverage, and of course, cash flow. Those are the 5 main things. And again, I have a whole video coming soon breaking down what to look for when investing in real estate and the 5 main assets within investing in real estate. But this is what we look at. We see a value proposition, so we know right now it's mismanaged. The grounds are messy. We can clean it up. Nothing's automated. There are people who are not paying. Rents could be increased. We can add more units, and stabilize the property. Because right now, at $1 million, we know there's a 6% cap rate. And like on paper, it's not the best deal, but if we bought the property, revamped everything, it could be a 10, 12, 13% cap rate through value add. But as you know, I'm not going to buy an underperforming investment that loses us money every single month. So I told him, hey, this won't work for us anymore. There's too many red flags. Nothing makes sense on your financials. We have three options here. We can do $900,000 at that $60K NOI or gross income. And now we're kind of close to DSCR, but probably not. Making $730 a month, not very high enough. So how about $800K? $800K is 1.3 for DSCR, 7.6 cap rate. That is a solid number there, and $1,200 a month, and like free net cash flow after debt services and NOI. This is a free cash flow, $15K a year, just about. That's a good return for investing. Plus, you add in appreciation, you add in debt, equity pay down, and so forth, even higher. And then our ideal buy point would be like $700K, probably even $600K, ideal. And that means our net NOI, gross income, again, in this example, is $60K, almost 9% cap rate. But here's the kicker again. All of this is good now, but the goal would be to increase this through increasing rents, adding more units, getting paid from past clients, more marketing, upgrades, and so much more to get that 9% or 6% to a 10, 12, 15% instead of your cash flow. And then from there, you have two options. You can either hold it and get cash flow, or you can refinance, do a HELOC, or you can sell it, get more money back, buy more properties, and just all over again. That's the goal. Always have an exit strategy. And of course, they said no to all of these because they wanted 1.5 minimum, technically 1.4, I guess, if you add in our concessions, was a minimum point. But for new numbers of doing due diligence ourselves, we now know it doesn't work. But something's missing. This is why this deal is not being moved forward on, and we said no to them. For a lot of reasons. One, like trust, and like, list goes on. But one big thing, something missing, is that if you look at the numbers here, all we have right now are rent rolls. I have no clue what the expenses are. We don't know how much they're paying for the taxes, if they're all paying for taxes, or any liens on the property. We don't know how much it costs to maintain the grounds, how much it costs for marketing, how much it costs for utilities. Probably not a whole lot for that one, since this, this is a storage unit. It's not climate control. But again, all this involves. If I add in all those things, it's probably only making 50 to 45K a year of NOI. That's like true NOI. Like I'll probably say even 40 to 50K a year of true NOI. Meaning for this to work and like make sense today, it would have to be like a 500K to a 600K purchase price from day one. And if we break down NOI again, just for an easy math here, NOI is gross operating income, GOI, minus operating expenses, gives us NOI. So the math they've been using the whole time, if most people do, when you look at any kind of investment deal, because most agents have no clue about investing, that they use the gross income at NOI, which is totally wrong, and it makes a great deal, or it can make a bad deal a great deal, even though it's still a terrible deal. And this is how good and bad can happen so quickly. Also, why I'm so passionate about walking you through how this looks, how to see financials, how to understand commercial real estate, how to understand wealth building, understand investing, buying and selling. Hold on, there's so much misinformation out there that makes people lose money. If you follow me for long, I always say this. One, you can never lose in real estate if you hold long enough. Let that sink in. You can never lose in real estate if you hold long enough and think long-term enough. Real estate is not some get-rich-quick scheme. It's not going to happen overnight. Buying one investment property will not retire you. It can help to some people, like you have like high cash flow, but even then, like find that one takes time, and you have to do due diligence. You have to understand numbers. You have to make sure you make a small investment like right now. Hope this is helpful for you guys. If you like this video, make sure you tag your friends down below, give us a share, tag your friends, and also know as well, if you have any questions about anything down below, let me know. I love talking about real estate, entrepreneurship, business, wealth, becoming our best selves in all areas in life, and so much more. So hopefully helpful for you. And can help with buying and selling real estate as well in all 50 states and 24 different countries. We help you all around the globe. Down below, have a free call with me and my team. We can help you in all different areas of selling, buying, commercial, and so much more. And of course, we want more support, more training, more videos. Over here, 2 things breaking down a whole playlist about getting the edge and help you up level your life, and breaking down as well how to find the best deals to buy as well, as you do the math on a deep level for you too. Thanks for watching. The best day yet. You are the best. Keep crushing it. I'll see you at the top.